Throughout history, individuals, civilizations, and societies have sought various assets to create wealth. From tangible possessions like real estate and precious metals to intangible concepts like intellectual property and education, the pursuit of affluence has taken many forms. In this exploration of wealth creation, we will delve into the historical background of 7 assets that have stood as pillars in this pursuit. As we navigate through history to the contemporary landscape, the transformative impact of these 7 assets becomes evident. Join us on this journey, where the pages of time unfold to reveal the stories of assets that, when harnessed wisely, have the potential to make you rich. Number 1. Real estate. Throughout history, real estate has been considered a powerful asset for building wealth. This story spans centuries, weaving through the fabric of civilizations, and continues to shape the fortunes of individuals, families, and nations. Our journey begins in ancient times when land ownership symbolized power and privilege. In agrarian societies, possessing fertile soil meant sustenance, and the ability to cultivate and produce food was paramount. The landed aristocracy wielded influence not only through bloodlines, but also by the vast expanses of land under their control. As societies progressed, the concept of land ownership also evolved. With the emergence of trade and commerce, urban centers came into existence, giving birth to the idea of prime real estate. Cities became the centers of economic activity, and owning property in these coveted locations became a symbol of prosperity. Owning shops, warehouses, and homes in bustling marketplaces was evidence of financial acumen and foresight. Fast forward to the Industrial Revolution, and the way people created wealth underwent a dramatic change. The demand for space, driven by growing industries and a rapidly urbanizing population, turned real estate into a valuable commodity. The rise of factories and the need for workers led to the development of residential areas around industrial hubs, further increasing the value of properties. In the 20th century, the economic boom that followed the World War II and the rise of suburbanization brought a new era of wealth creation in the real estate industry. Home ownership became synonymous with the American dream, and as more families sought to own a piece of the suburban landscape, property values skyrocketed. The introduction of mortgage financing widened the pool of people who could invest in real estate, turning homes into not just shelters but also appreciating assets. In the late 20th and early 21st century, real estate markets underwent globalization. Technological advancements and the interconnectivity of the world economy enabled investors to diversify their portfolios across borders. Iconic cities such as London, New York, Tokyo, and others became a hub for international capital, and real estate emerged as a global currency of wealth. Real estate has proven to be a reliable asset for building wealth, especially during the 2008 financial crisis. While traditional financial instruments faltered, real estate proved resilient. Despite temporary downturns, property values eventually rebounded and confirmed the enduring nature of real estate as a store of value. Today, the advent of the digital age has introduced new dimensions to the real estate landscape. Virtual properties and blockchain technology are challenging conventional norms. However, the essence of real estate as a tangible, appreciating asset remains unchanged, with the power to shape individual and collective destinies. In conclusion, the story of real estate as a wealth-building asset is a tale of adaptability and endurance, spanning from ancient agrarian societies to the digital frontier of the 21st century. The allure of owning a piece of the earth persists, and the importance of real estate as a cornerstone of wealth creation will continue to echo through the corridors of time. Number 2. Precious metals. Throughout history, precious metals like gold, silver, and platinum have played crucial roles in shaping the fortunes of individuals and entire civilizations. These metals have been recognized as valuable assets for building wealth, and their importance can be traced back to ancient times. Among all the precious metals, gold has stood out as the most alluring. It has been considered a symbol of wealth and power since ancient times. The Egyptians, for example, adorned their pharaohs with golden treasures, viewing it as a symbol of divinity and immortality. Across cultures, from the Greeks to the Romans, gold held intrinsic value and was used as a medium of exchange in early trade. The Silk Road was an ancient network of trade routes that connected the East and West. It facilitated the exchange of goods as well as precious metals, such as gold and silver, which enriched merchants and contributed to the rise of prosperous empires. During the Middle Ages, monarchs established gold and silver coins as official currencies, thereby increasing the value of precious metals. Their scarcity made them even more desirable. European explorers, eager to amass wealth, journeyed across oceans in search of new territories with untapped gold and silver deposits. The discovery of the New World led to a flood of precious metals in Europe, causing economic transformations and shaping the course of empires. During the 19th century, the discovery of gold in California and other places led to economic prosperity and represented a quest for a better life. Gold played a significant role in the establishment of the gold standard, which tied the value of a country's currency to a specific quantity of gold. This period marked the merging of precious metals and modern finance. In the 20th century, precious metals played a varying role, particularly during times of economic uncertainty. During the Great Depression, gold was considered a safe haven, leading to the temporary abandonment of the gold standard. During times of war and crisis, precious metals emerged as a reliable hedge against inflation and economic turmoil. At the turn of the 21st century, investors became interested in precious metals again as they sought alternative assets amidst volatile financial markets. Specifically, gold regained its status as a safe haven asset. The introduction of exchange-traded funds, ETFs, made it easier for investors to invest in precious metals without physical ownership. Recently, precious metals have been used beyond their traditional purposes. While gold and silver are still valued for their aesthetic appeal and industrial applications, new precious metals such as platinum and palladium have gained prominence, especially in the automotive industry for catalytic converters. As we move forward, the story of precious metals as wealth-building assets continues to evolve. In a world of digital currencies and complex financial instruments, gold, silver, and other precious metals maintain their timeless appeal as tangible stores of value. The saga of precious metals as wealth creators echoes through the ages, an enduring testament to their intrinsic allure and enduring significance in the human quest for prosperity. Number 3. Entrepreneurial ventures. The history of entrepreneurship as a means to create wealth is a dynamic and ever-evolving story that takes place amidst human innovation, economic progress, and the spirit of enterprise. Our journey begins during the Industrial Revolution, when daring individuals transformed their innovative ideas into tangible businesses. Visionaries like Thomas Edison, Andrew Carnegie, and John D. Rockefeller established the foundation for entrepreneurial success, revolutionizing industries such as electricity, steel, and oil. Their ventures not only created vast wealth, but also propelled society into a new era of prosperity. The 20th century saw the emergence of iconic entrepreneurs like Henry Ford, who transformed the automotive industry with the assembly line. Entrepreneurial pioneers not only created wealth for themselves, but also spurred economic growth, job creation, and technological advancements that shaped the modern world. After World War II, the startup culture emerged as individuals with innovative ideas sought to disrupt traditional industries and create new markets. Silicon Valley became a symbol of entrepreneurial prowess, giving birth to companies like Hewlett-Packard, Intel, and later household names like Google and Amazon. The success of these ventures not only generated immense wealth for their founders, but also created ecosystems that fostered further innovation and wealth creation. The arrival of the internet and the subsequent digital revolution created new opportunities for entrepreneurial ventures. Startups with innovative business models and disruptive technologies gained prominence, and the barriers to entry for aspiring entrepreneurs significantly decreased. This democratization of entrepreneurship allowed individuals with passion and creativity to bring their ideas to fruition, leading to the creation of countless successful ventures. In the 21st century, the importance of entrepreneurial ventures as wealth-building assets has only increased. The startup ecosystem continues to thrive globally, with hubs emerging in places such as Beijing, Tel Aviv, and Berlin. The rise of venture capital as a funding mechanism has provided entrepreneurs with the financial support they need to scale their ventures quickly. Unicorns, startups valued at over $1 billion, have become symbols of entrepreneurial success, inspiring aspiring business leaders worldwide. Entrepreneurial ventures not only contribute to personal wealth, but they also play a vital role in driving economic growth, job creation, and technological innovation. The wealth generated by successful entrepreneurs often flows into philanthropy, further contributing to societal well-being. As we navigate the complexities of the 21st century, the story of entrepreneurial ventures as wealth-building assets continues to evolve. From traditional industries to cutting-edge technology, the spirit of entrepreneurship remains a powerful force driving economic progress and shaping the future. The tale of individuals who dared to dream, innovate, and build successful ventures stands as a testament to the enduring importance of entrepreneurship as a pathway to wealth creation. Number 4. Stocks and equities. The history of stocks and equities as wealth-building assets is a fascinating journey through the financial world's triumphs, crises, and democratization of ownership in the world's most powerful companies. Our story starts in 17th century Amsterdam, where the world's first stock exchange, the Amsterdam Stock Exchange, was established. At that time, enterprising merchants sought a way to raise capital for their ventures, and the idea of issuing shares in a company was born. The Dutch East India Company, founded in 1602, became the world's first publicly traded company, allowing investors to buy and sell shares of the company on the exchange. As the concept of stock ownership took hold, it spread across continents. In the 18th and 19th centuries, stock exchanges emerged in London, Paris, and New York, facilitating the trading of stocks and providing a platform for companies to raise capital from a broad base of investors. The growth of stock markets was fueled by the Industrial Revolution's railroads, telegraphs, and other industries, and stocks became a means for individuals to participate in their nation's economic expansion. In the 20th century, the United States emerged as an economic powerhouse, and Wall Street became synonymous with global finance. The stock market played a crucial role in funding American industry, from the expansion of railroads to the technological boom in Silicon Valley. The creation of stock market indices, such as the Dow Jones Industrial Average in 1896, provided benchmarks to measure the performance of the broader market. The Great Depression of the 1930s led to a re-evaluation of financial regulations, culminating in the establishment of the U.S. Securities and Exchange Commission, SEC, in 1934. The SEC's mission was to protect investors, ensure fair and efficient markets, and facilitate capital formation. These regulations aimed to restore confidence in the stock market and laid the foundation for its evolution into a cornerstone of wealth creation. In the latter half of the 20th century, technological advancements transformed stock trading. Electronic trading platforms and computerized systems replaced traditional open outcry methods, making it easier and faster to buy and sell stocks. The globalization of financial markets allowed investors to diversify their portfolios across borders, contributing to the interconnectedness of the world economy. The 21st century has brought about a significant change in the way people invest in stocks. Online brokerage platforms and the rise of retail investors have made it easier than ever for individuals to participate in the stock market. The concept of initial public offerings, IPOs, has also allowed startups to go public and raise capital from a broader range of investors. This, in turn, has led to the emergence of new and innovative companies on the stock exchanges. Over the years, stocks and equities have become essential wealth-building assets. The sustained growth of major stock indices has demonstrated their significance, and while markets have experienced volatility, historical trends show that, over the long term, stocks have provided a favorable return on investment. Investors recognize the role of stocks as a component of diversified investment portfolios, seeking both capital appreciation and income through dividends. In conclusion, the story of stocks and equities as wealth-building assets is one of evolution. From the narrow streets of 17th-century Amsterdam to the vast digital landscape of the 21st century, stocks have democratized ownership, allowing individuals to share in the success of companies and participate in the growth of economies. As markets continue to evolve, the story of stocks remains integral to the narrative of wealth creation and financial prosperity. Number 5. Intellectual property. The emergence of intellectual property, IP, as a means of accruing wealth is a recent and transformative narrative that reflects the rapid pace of innovation and the evolving nature of wealth creation in the contemporary world. Our journey begins in the 17th century, with the advent of copyright law in England. The Statute of Anne in 1710 marked a crucial moment by granting authors exclusive rights to their works for a limited period. This recognition of intellectual creation as a form of property set the stage for the idea that ideas, inventions, and creative works could be protected and monetized. In the 19th century, the need to safeguard technological innovations arose with the rise of industrialization. The patent system, as we know it today, began to take shape. Governments around the world began granting inventors exclusive rights to their creations in exchange for the public disclosure of their innovations. Patents became a cornerstone for protecting and commercializing inventions, fostering a climate of innovation and competition. The 20th century witnessed the expansion of intellectual property rights to include trademarks and trade secrets. Trademarks became vital for brand protection, allowing companies to distinguish their products and services in the marketplace. Trade secrets, on the other hand, provided a means for companies to safeguard valuable information, such as formulas and processes, giving them a competitive edge. As the world moved towards the digital age, intellectual property became more significant. With new software, digital content, and biotechnological innovations emerging, it became necessary to protect intangible assets. Copyright and patent laws were amended accordingly to cover these new forms of intellectual property, ensuring that creators and inventors could derive economic benefits from their digital creations. In the late 20th and early 21st centuries, intellectual property became a crucial component of global commerce. Multinational corporations recognized the value of their intangible assets, including patents, trademarks, and copyrights, as significant contributors to their overall market value. IP portfolios became a strategic tool for negotiation, collaboration, and revenue generation through licensing and partnerships, in addition to being a means of protection. The rise of the knowledge economy further highlighted the importance of intellectual property. In sectors such as pharmaceuticals, technology, and entertainment, companies began to invest heavily in research and development, relying on IP protection to safeguard their innovations. The concept of open innovation, where companies collaborate and share intellectual property for mutual benefit, gained traction, demonstrating the versatility and collaborative potential of intellectual assets. In the 21st century, intellectual property has become a critical driver of economic growth and wealth creation. Startups and tech giants alike recognize the significance of building and protecting their intellectual property portfolios. The valuation of companies often includes intangible assets, reflecting the market's acknowledgement of the wealth-generating potential of intellectual property. As the world continues to advance in the realms of artificial intelligence, biotechnology, and other cutting-edge fields, the story of intellectual property as a wealth-building asset remains dynamic. The ability to protect and capitalize on innovative ideas, creative works, and technological breakthroughs continues to shape industries and economies, emphasizing the enduring importance of intellectual property in the contemporary narrative of wealth creation. Number 6. Education and skills. Education and skills have been instrumental in creating wealth and contributing to the progress of human society. The origin of education can be traced back to ancient civilizations, where it was primarily reserved for the elite class. In ancient Greece, philosophers like Socrates, Plato, and Aristotle laid the foundation for critical thinking and intellectual pursuit. Similarly, in ancient China, Confucius emphasized the importance of education for personal and societal betterment. The Middle Ages marked the establishment of universities in medieval Europe, such as the University of Bologna, 1088, and the University of Paris, 1150. These institutions became centers of learning where knowledge was preserved and transmitted across generations. Education, which was predominantly centered around theology and philosophy, became a symbol of intellectual advancement and prestige. The Renaissance period saw a renewed interest in classical learning and the arts. The invention of the printing press by Johannes Gutenberg in the 15th century played a pivotal role in making knowledge more accessible. The spread of literacy and the availability of printed materials expanded the horizons of education beyond the elite, laying the foundation for a more educated population. The Industrial Revolution in the 18th and 19th centuries brought about profound economic and social changes. The demand for skilled workers in factories led to the establishment of educational systems focused on imparting practical skills. Basic literacy became essential for the workforce, and education became a catalyst for economic mobility. The 20th century witnessed a global push for universal education. Governments recognized the intrinsic value of an educated populace for economic development and social stability. The expansion of primary and secondary education, as well as the proliferation of universities and vocational training institutions, became a hallmark of progress. In the latter half of the 20th century and into the 21st century, the knowledge economy emerged. The rapid advancements in technology and globalization shifted the focus from industrial skills to knowledge-based skills. Education and skills in science, technology, engineering, and mathematics, STEM, became increasingly valuable. The rise of the Internet further democratized access to information and educational resources, opening new avenues for learning. Higher education became a key driver of individual and national wealth. Degrees and certifications became passports to better job opportunities and increased earning potential. The narrative of success became intertwined with the pursuit of education, and lifelong learning became a necessity in a rapidly changing world. Skills, in addition to formal education, gained prominence. The ability to adapt, innovate, and acquire new skills became essential for thriving in dynamic industries. The demand for specialized skills in fields like data science, artificial intelligence, and cybersecurity skyrocketed, reflecting the evolving nature of the workforce. In contemporary times, the importance of education and skills as wealth-building assets is more pronounced than ever. The Fourth Industrial Revolution, characterized by automation and digital transformation, places a premium on human skills that complement technological advancements. Individuals equipped with a strong educational foundation and relevant skills find themselves better positioned to navigate the complexities of the modern economy. As we continue into the future, the story of education and skills as assets that create wealth evolves. The ability to adapt to new challenges, coupled with a solid educational background and a diverse skill set, remains a potent combination for personal and societal prosperity. The narrative persists, with education and skills standing as pillars of progress in the ongoing story of human achievement and wealth creation. Number 7. Networking and relationships. The power of networking and building relationships has been a key factor in creating wealth throughout human history. The earliest social networks were formed through family ties, tribal affiliations, and trade alliances in ancient civilizations. The Silk Road, which spanned from east to west, demonstrated the importance of interconnected relationships in promoting economic prosperity. Merchants, travelers, and diplomats relied on a vast network of connections to navigate the complexities of trade and cultural exchange. During the Renaissance, the Medici family of Florence emerged as patrons of the arts and influential figures in politics and finance. Their network of relationships extended to artists, philosophers, and leaders across Europe, creating a cultural and economic hub that propelled Florence to the forefront of innovation and wealth. The Industrial Revolution in the 18th and 19th centuries saw the rise of industrialists like Andrew Carnegie and John D. Rockefeller, who not only amassed fortunes, but also cultivated extensive networks. Carnegie, for instance, leveraged his connections to build a steel empire, while Rockefeller's Standard Oil Company dominated the oil industry through strategic partnerships and alliances. In the 20th century, the concept of networking gained momentum as societies urbanized and communication technology advanced. Professional associations, clubs, and business networks became instrumental in fostering connections. The post-World War II era saw the establishment of multinational organizations like the United Nations and the European Union, emphasizing the importance of international relationships in the pursuit of peace and economic cooperation. The advent of the digital age in the late 20th century transformed the landscape of networking. The rise of the internet, social media, and professional networking platforms like LinkedIn provided unprecedented opportunities to connect with individuals globally. The boundaries of physical proximity diminished, allowing people to build relationships based on shared interests, expertise, and goals. In the business world, the Silicon Valley ecosystem became synonymous with the power of networking. The collaborative spirit and interconnected relationships among entrepreneurs, venture capitalists, and tech enthusiasts fueled the rapid growth of innovative companies. The success stories of companies like Apple, Google, and Facebook underscored the significance of networks in fostering entrepreneurship and wealth creation. The 21st century has witnessed a paradigm shift in the nature of networking. The gig economy and freelance work have thrived on digital platforms where professionals can connect with clients and collaborators globally. The importance of personal branding and online presence has become pivotal in establishing and expanding networks. Networking and relationships have proven to be crucial in various domains, from politics to academia, sports, and entertainment. Influential figures leverage their connections to navigate complex landscapes, amplify their impact, and create opportunities for themselves and others. In the contemporary narrative of wealth creation, networking and relationships stand as indispensable assets. Strategic alliances, mentorship, and collaborative ventures have become pathways to success. As the world continues to evolve, the story of networking and relationships persists, illustrating that in the interconnected tapestry of human experience, the bonds we forge with others remain a fundamental force in the creation of wealth and prosperity.